Kia ora koutou. Thanks for taking the time to join us today. I'm Lex, a capability advisor here at Charity Services, and I'm joined by Dawn Logan, our capability accountant. We are co-presenting this webinar today. The webinar is directed at charities that report under the Tier 3 not-for-profit standard. A little bit of housekeeping before we start. Can you hear us? Make sure your computer is unmuted and check your internet if you're having trouble. The webinar will be recorded and we will send you an email with the recording link and any resources we discuss. We welcome your questions throughout the webinar and we will have time at the end to answer them, so please use the Q&A box to ask questions. We recommend you ask them throughout the webinar as they come to mind, but please refrain from asking questions specific to your charity. In the unlikely event that our sound cuts out, we'll work through any technical difficulties and aim to be back in touch with you as soon as possible. We also want to make sure you're all in the right webinar. This webinar is designed for Tier 3 charities who have filed a performance report before and would like to understand the changes in the Tier 3 not-for-profit standard. How do you know if you're a Tier 3 charity? Tier 3 charities are those charities whose expenses are less than $5 million per year, who use accrual accounting and do not have public accountability. Operating payments include money spent on day-to-day costs. They do not include purchase of assets, such as computers or investments like stock. Accrual-based accounting is when revenue is recorded on the date you issue the invoice, rather than on the date payment was received. Expenses are recorded when incurred, and it includes depreciation of assets. Charities using accrual accounting often use accounting software such as MYOB or Xero. While all charities are generally considered to be publicly accountable, public accountability has a specific meaning in the accounting standards. The full definition of public accountability for financial reporting purposes can be found on the External Reporting Board (XRB) website. Generally, it includes entities whose main activity is holding cash or other assets on behalf of others, like a superannuation scheme, or who issue debt or equity. If your charity does fall into this definition, you'll be required to report under Tier 1. So what can you expect from the webinar today? Well, we're going to provide an overview of the changes and let you know when you need to start using the Tier 3 not-for-profit standard. As a reminder, one of the obligations of being a registered charity is to report to Charity Services every year. Charities need to do this within 6 months of the end of their financial year. There are two separate parts of annual reporting: a performance report and an annual return. Most people complete their annual return online as it is quicker and easier. In the annual return form, you'll be asked to update your charity's details, if any updates are necessary, and answer some questions about your charity. Some of the information may be the same as what's in the performance report, so make sure you refer to your completed performance report for the answers. Your performance report will be displayed on the Public Charities Register, and the data that you provide through the annual return online form is collated with the other 29,000 charities on the Charities Register and can then be used to tell a story about the wider charitable sector in Aotearoa. The XRB has recently updated the financial reporting standard for Tier 3 charities. The standard is in effect for financial years that began on or after 1st April 2024 and applies now for most charities. Any charities with a balance date at the end of this month, March 2025, will be the first group required to use the updated standard to create their performance report. All charities who have started their financial years since the 1st of April 2024 should have a look now at the updated standard to understand what's changed. This may affect how you keep track of your service performance, revenue, and expenses so that you're ready when your year ends. Charities currently preparing their performance reports can also use the Tier 3 not-for-profit standard. For example, if your financial year ended in December 2024 and your performance report and annual return are due by the end of June 2025, then you can choose to use the updated standard. The table above shows recent and future balance dates, when their respective annual returns and performance reports are due, if the Tier 3 not-for-profit standard is required to be used, and when it can be opted into. If you have a balance date before 30 September 2024 and haven't yet filed your performance report and annual return, you're also able to use the updated Tier 3 NFP standard as long as your financial year began after 1st of June 2022. That means the year-end date of 30 June 2023. XRB has created an Excel template to help you streamline your reporting. The template can be found on the Charity Services and XRB websites. We'll show you where to find it on the next couple of slides if you want to download it now. When we email you the link to this recording, we will include links to the template as well. The template has green and yellow boxes. The green ones must be filled in if applicable to your organization. Yellow boxes are only required if the information is easily available. The XRB has also provided guidance within the template to help charities understand which fields are optional, required, or required if applicable. The template is optional, however, and we will accept performance reports in other formats as long as they comply with the requirements of the Tier 3 standard. To find the updated templates on the Charity Services website, www.charities.govt.nz, select Reporting Standards at the top of the page, then Tier 3. Scroll down the page past the date table. Just below it, you'll find the Tier 3 NFP template. On the XRB website, www.xrb.govt.nz, you can find the Tier 3 NFP standard and corresponding template by selecting Standards, then Accounting Standards. On the Accounting Standards page, select Tier 3 under the Not-for-Profit heading. Once on the Tier 3 Not-for-Profit page, choose the Tier 3 NFP Standard Issued May 2023 link. This will lead you to a page with additional information, the Tier 3 Standard, and the reporting template. So what has actually changed? The Tier 3 Standard has been updated and is now called the Tier 3 NFP Standard. The standard simplified some of the requirements, especially around entity information and revaluing some assets, to better reflect the circumstances of the Tier 3 charities. It also adds some new requirements to increase transparency and to better meet readers' needs. There are expanded categories of revenue and expenditure. Additional information is now required regarding reserves and accumulated funds, and additional guidance was added in the template as well as in the standard to assist Tier 3 entities when preparing their performance report. Now we're going to take a closer look at the performance report template and talk through the changes. The two sections of non-financial information are the same as the previous standard, entity information and the statement of service performance. We'll look at the entity information first. Several of the fields are the same as before: your charity's legal name and any other name you're known by, your charity's registration number or NZBN if you have one, type of entity, for example, charitable trust or incorporated society, your charity's purpose or mission, entity structure. Some guidance has also been added for the entity structure field. We've noted in the past that some charities may not understand what is required there and have included information that is not relevant to their structure. All that's required here is whether your charity is a standalone charity or if you operate in several locations. The next field is where charities describe how they're governed. That is, how many trustees there are, if they're elected, and what their titles are. The entity information section also asks if your charity controls any other entities for financial reporting purposes. If so, list those entities here as well as their charity's registration number or NZBN if applicable. For more information regarding control relationships, have a look at the Charity Services website. The final field asks about your charity's reliance on volunteers and donated goods or services. If you don't have volunteers or donated goods or services, you can leave this blank or write not applicable. If your charity does use volunteers, describe them here to let readers know how your charity utilizes donated time and/or goods and services to meet your purpose. Tier 3 NFP standard no longer requires information on the main sources of the charity's cash and resources, or the main method used by the charity to raise funds, both of which were required under the previous standard. The next section is the Statement of Service Performance. A field has been added here for charities to describe what they're seeking to achieve over the medium to long term. The information provided here is likely to be closely related to your mission or purpose. The difference is that a mission or purpose will be quite general and applies over the life of the charity. The information entered here should be more specific, focused on what your charity is seeking to achieve in the next 3 to 5 years. The Statement of Service Performance also requires charities to describe their main activities and provide quantities to the extent that you're able to. You don't need to list everything you did, just the most important activities. Charities should seek to provide a meaningful mix of measures and/or descriptions of significant activities or achievements for the year. For example, you could list the quantity of goods provided or hours spent by employees and volunteers to provide services, or descriptions or feedback from those that you've helped. The standard has more guidance in regard to this section. We encourage you to refer to it as needed when gathering information and preparing your performance report. You'll be provided with a link to the Tier 3 not-for-profit standard in the email you receive when the recording is ready to be sent to you. For those who have used the previous Tier 3 standard, you're expected to provide previous year information for the key activities you list here. I'm now going to hand over to Dawn, who's going to take you through the last half of the webinar and discuss the financial parts of the performance report.
Thanks, Lex. Hi, everyone. I'm going to talk you through the changes to the financial statements in the Tier 3 not-for-profit standard. The standard does not change the overall structure or number of financial statements. They are the Statement of Financial Performance, or income statement, the Statement of Financial Position, or balance sheet, and the Statement of Cash Flows. Similar to the previous standard, these are followed by the Statement of Accounting Policies and notes to the performance report. There are changes within the reports, however, which we will cover today. The Statement of Financial Performance reflects the greatest number of changes to the Tier 3 performance report. The previous category of donations, fundraising, and other similar revenue has been split into 5 categories based on source and expectations of the funder. They are donations, COHA, bequests, and other general fundraising, general grants, capital grants and donations, government service delivery grants and contracts, non-government service delivery grants and contracts. In addition, revenue from sales of goods and services has been renamed to revenue from commercial activities. This provides clarity both for the charity and the end user. I will cover the new categories of grants and donations and provide brief examples. The general grants category is quite broad and should be used for any grants received for general funding of your charity. Capital grants and donations. Use this category for funds received that come with an expectation from the funder that the money is used to purchase or construct a significant asset. Service delivery grants are split into 2 categories, those from government sources and from non-government sources. The funding to include in these categories are grants that are in substance a contract for the delivery of goods or services. For example, if a government grant is tied to the delivery of a certain number of patients being seen at a health clinic. Charities should also include revenue from sales of goods or services which directly contribute to the charity's stated purpose, but are not specifically tied to a service delivery grant. For example, if a charity has an objective to improve mental health in their community and provides discounted counseling, the fees from this counseling would be included in one of these categories instead of in commercial activities. The revenue from fees paid should follow the main source of funding. That is, if the mental health clinic is generally funded by government grants, the fees revenue would also be grouped into that category. The commercial activities category is meant to capture revenue from activities conducted with the intention to derive a surplus and do not contribute to the charity's stated purpose. For example, if a food bank were to regularly sell household items. If the activities are ad hoc or on a smaller scale, they would be considered fundraising revenue. For example, if a health clinic sold Christmas crackers every year. XRB has also provided new guidance for deferred revenue. I will cover that briefly in conjunction with the statement of financial position. The expense section of the statement of financial performance only has minor changes. Employee and volunteer expenses have been separated, and costs related to providing goods or services has been split into two categories for clarity: expenses related to commercial activities and other expenses related to service delivery. When considering where to categorize expenses, keep in mind the related revenue categories and examples provided earlier. Separating the categories in the Statement of Financial Performance itself is no longer allowed under the Tier 3 not-for-profit standard. However, if you would like to provide more information on revenue and expenses within these categories, you can do so in the notes. If you use accounting software, you'll need to consider the best way to group your revenue and expenses into the updated minimum categories in the Tier 3 not-for-profit standard. Please think carefully about where you place your transactions, as the category should be used consistently so comparisons could be made between financial years. Also keep in mind, charities are expected to regroup the previous year information into the new categories when using the standard for the first time. The second financial report is the Statement of Financial Position. The Assets section of the statement has no significant changes and has not been shown on this page. One category was renamed. The previous Bank Accounts and Cash line item has now been renamed to Cash and Short-Term Deposits. In the Liabilities section, the previous category of Unused Donations and Grants with Conditions has been renamed to Deferred Revenue. The Tier 3 not-for-profit standard has also introduced a new model for recognizing revenue and provides guidance on when to record transactions to deferred revenue. We'll go over this in more detail on the next slide. The Accumulated Funds section has the most significant changes in this statement. As this section is updated automatically from Note 7, we'll cover those changes there. The XRB template has updated how it indicates if certain totals don't balance or don't match other sections of the report. Instead of a false message, there is a green or red box that shows either OK or displays a message stating the error. The XRB has provided a new model for recognizing revenue. Instead of recording revenue based on use or return conditions, the Tier 3 not-for-profit standard asks charities to consider if there is a documented expectation over the use of a significant grant, donation, bequest, or pledge. The revenue is recognized over time as the expectation is met. A documented expectation is set externally by a funder and evidenced in writing, agreed by both parties, and specific enough to reliably track when the expectation has been met. Examples include constructing a building or to support a specific project. The standard advises that if an application for funding sets out how or when the charity expects to use the funds received, and their application is then approved by the funder, this is sufficient documentation. Charities will need to use their best judgment to decide when certain conditions have been met and revenue should be recognized. The standard provides several examples starting at paragraph A83. The flowchart above can also be found in the standard. If deferred revenue is recorded, related details are required to be disclosed in Note 9. We'll cover that later. If there are no documented expectations from the funder, revenue should be recorded immediately. The third financial statement is the Statement of Cash Flows. We'll first look at the changes to the cash flows from operating activities section. The categories here are the same as the updated categories in the Statement of Financial Performance. Of course, only cash transactions will be reported here. I will note the net GST line item found in the previous template is not shown on this template. The standard does not provide specific guidance around this. guidance around this, but I expect any GST received or paid would instead be grouped into other cash received or other payments in this section. The second part of the cash flow statement is cash flows from other activities. This was previously known as cash flows from investing and financing activities. However, the categories are largely the same, with minor tweaks to the wording for clarity. The bottom of this statement provides an automatic calculation of closing cash based on the figures entered. The template also matches closing cash with cash as entered into the statement of financial position. If the figures match, a green box with OK is displayed. Let's now review the changes to the accounting policies and notes section. Similar to the previous template, the basis of preparation statement has already been completed in the template. At the time of this webinar, there is no longer a choice of disclosure for the treatment of GST. Included by default in the template is a paragraph stating that your charity has prepared the financial statements excluding GST. If your charity is not registered for GST and/or your financial statements include GST, you will need to change the statement. The other accounting policy statements and optional fields have not changed from the previous template. However, the XRB has included additional guidance in the standard on opting up to Tier 2 standards for certain transactions. This can be found at Appendix D. The last section we will cover today is the notes to the performance report. There is one minor change. The analysis of assets and liabilities have been split into two notes, numbers 3 and 4. However, there are a few significant changes. The addition of a column in the property, plant, and equipment table to include revaluation movements, this is note 5. The addition of a note to provide details of investments, similar to the property, plant, and equipment note, this is found at note 6. The expansion of reserve categories in the accumulated funds note, note 7, and the replacement of the significant grants and donations note with a deferred revenue note, which is note 9. Note 5, Property, Plant, and Equipment, already has categories of assets pre-populated into the template, which can be changed to suit your charity. The note is set up to calculate automatically based on what is entered into the green fields. There is now a column for any revaluation gains or losses recognized in the revaluation reserve for the current year. This is relevant for charities who have elected to measure assets at revalued amounts instead of at cost. I will go over this briefly. There are two groups of charities who will be applying the requirements in relation to revaluation of assets. Group 1 are charities who previously accounted for assets, including investments, at cost in accordance with the previous Tier 3 standard. This group may elect to revalue assets in the current and future financial years, in which case a change in accounting policy must be disclosed in the notes. Group 2 are charities who previously elected to revalue assets by applying the applicable Tier 2 standards. This group can either continue applying the requirements in the applicable Tier 2 standards to the revalued assets, or cease using the Tier 2 standards and instead apply the revaluation requirements in this standard, the Tier 3 not-for-profit standard. This will also be a change in accounting policy and must be disclosed in the notes. Essentially, the Tier 3 not-for-profit standard now allows for revaluing of certain assets without having to apply the Tier 2 standards. A charity may elect to revalue assets based on a council valuation, even if that valuation was not updated before the beginning of the current financial year. Please review Appendix C of the standard, starting at paragraph C17 for detailed guidance. Note 6 is new to the Tier 3 not-for-profit standard. The standard now allows financial investments that are publicly traded to be revalued if based on a public market price, without opting up to the Tier 2 standards. If your charity has investments in shares, bonds, or similar assets, please refer to the standards starting at paragraph A145 for detailed guidance. Note 7, Accumulated Funds, has been expanded in the Tier 3 not-for-profit standard. This is due to a new requirement for increased transparency over reserves. Where previously there had been only one column for reserves, there are now 4 types of reserves. The first type is restricted reserves. Charities may elect to create a restricted reserve by transferring funds from accumulated surpluses or deficits. This reserve is to set aside grants or donations received that can only be used for a particular purpose. The restriction must be set by an external party, however. The restriction must not also meet the criteria to be considered a documented expectation. As discussed previously, restricted revenue with documented expectations would be recognized as deferred revenue. So considering the flow chart from earlier, this could be funding received that has expectations, but perhaps the expectations are not clearly documented, or there aren't clear milestones in order to recognize the revenue over time. In these cases, the revenue should be recorded immediately, and the restricted reserve column in the accumulated funds node should be used to show the funds have been set aside. The second type of reserve is discretionary. This is where charities can move amounts from accumulated surpluses or deficits based on an internal decision of the charity in order to set aside funds for a particular purpose, such as a future purchase of an asset. As this is an internal decision, funds can be shifted back to the accumulated surplus column if the charity decides the reserve is no longer required or needs the funds for a different purpose. The third type of reserve relates to revaluation movements. These movements are automatically populated into the accumulated funds table when they are entered into Note 5, Property, Plant, and Equipment. Other revaluation amounts relating to the disposal of assets, including investments, can be entered into the table on a separate line. Finally, the template includes a column for Other Reserves. This column is available for charities to use if they have elected to apply the requirements of a Tier 2 standard and the effect of the transactions is recognized directly in accumulated funds. Refer to Appendix D of the standard for more information. Like the rest of the template, the updated accumulated funds table also provides clarity on which cells auto-calculate or auto-populate, they are colored gray, and which ones are available for data entry, colored green. Below the accumulated funds table, you'll see a section titled Breakdown of Restricted and Discretionary Reserves. Charities are required to disclose information that enables end users to understand a charity's objectives, policies, and processes for managing its reserves. In meeting this requirement for restricted reserves, a charity must disclose a description of the purpose of the reserve and the nature of this restriction. In meeting this requirement for discretionary reserves, a charity must disclose a description of the purpose of the reserve, the entity's plans for applying the reserve towards its stated purposes, and when the entity expects the reserve will be applied. For guidance, refer to the standard starting at paragraph A231. Note 9, Other, includes 4 disclosures that are required if applicable to your charity. Only 2 of the disclosures have notable differences: deferred revenue and assets used as security for liabilities. The previous required note, titled Significant Grants and Donations with Conditions which have not been recorded as a liability, that is a very long title, has been replaced with an even longer title, Deferred Revenue Relating to Unused Significant Donations, Grants, Bequests, and Pledges with Expectations over Use. Thinking back to the Statement of Financial Position, where we talked about deferred revenue, if a charity has entered a figure there for deferred revenue, this note is required to help readers understand the details behind that number. Charities are required to provide the purpose and nature of the documented expectations over future use and when those conditions will be met. As you can see on the screen, the original amount of the funding is also required, as is the amount deferred. For the assets used as security for liabilities note, the layout of the table has been improved to allow charities to provide the information required. Description of liability or borrowing, description of asset used as a security, amount of the borrowing, and amount of the asset used as a security.
That was a quick overview of the changes to the performance report template under the Tier 3 NFP standard. To recap, the Tier 3 standard simplified some of the requirements, especially around entity information and revaluing some assets, to better reflect the circumstances of Tier 3 charities. We discussed the changes to the entity information and statement of service performance, the new categories of revenue in the statement of financial performance, the changes in guidance around deferred revenue in the statement of financial position, and the changes to the notes, most notably the new reserves categories in accumulated funds and the revaluation column in the property, plant, and equipment note. Your next steps are to start thinking about how you collect the information you need to prepare your performance report. If you use Xero or MYB accounting software, you may also consider how to group your revenue and expenses for the updated minimum categories required by the Tier 3 standard. Also review any grants and other funding you may receive and consider if there are conditions attached. If your charity is legally required to undergo an audit, make sure to discuss with your auditor what evidence they may seek to support your statement of service performance and if any further steps are required for your prior year comparative figures. We now have some time for your questions. Please type your questions into the Q&A box if you haven't done so already. We'll do our best to get through as many questions as we can. We do ask for you to please not ask questions specific to your charity. If you have those specific questions, please send us an email. The email is on the slide at the moment. So, Dawn, our first question.
Oh boy.
If changing from Tier 2 to Tier 3, can a copy of the prior year's accounts suffice for the comparatives? If not, must the prior year comparatives be reclassified to align with the new Tier 3 standards?
I do not recall off the top of my head. I remember reading in the standard, there's an appendix that covers this quite specifically for anyone who is shifting into Tier 3, either from the previous Tier 3 standard, from Tier 4 or Tier 2. And I vaguely remember that I think you're expected to restate, but also in some parts you can attach information. Please have a look at that appendix. I think it's Appendix A, to understand what specific requirements are for your charity and your requirements. I know that a lot of Tier 2 might be moving down to Tier 3 this year, so it's very important to get this right because the threshold has increased from 2 million to 5 million. That will capture all of those who are in the lower part of Tier 2.
Fair enough. The next question. I used the standard last year and wonder if I might expect any feedback about the measures we chose to reflect progress in our key activities. If I hear nothing, does that mean our measures are okay?
Do you want to talk about compliance?
Sure thing. There are over 29,000 registered charities, and as such, we're not able to manually review every single annual return. If you have a question about your specific annual return that's been submitted to us, please feel free to send us an email with the specific questions you have. If your annual return is one that is manually reviewed by us, if there are any issues with it, we will be in touch with the primary contact for the organization. Next question.
Oh boy, a lot of questions.
Lots of questions. The next question, are local government contracts to be included in government service delivery contracts?
I would expect so. I think government includes any type of government.
Makes sense. The next question, vested asset from developers should go into which revenue line? We don't think it's a fundraising activity, but our auditor said it should be classified to donations and other fundraising revenue.
I don't know if I quite understand that, but if it is a specific question and you have sought advice or received advice from your auditors, then I would expect they would know best how to treat any particular transaction that relates to your charity.
If our charity has contractors to fulfill the goals of the charity, i.e., they're not employees, where should this expense be put?
It would be put into the most logical expense. Oh, Lex, you've printed out the template for me so I can have a look. So I don't scroll around on the screen in front of everyone. It might fit into other expenses related to service delivery, depending on what those contractors are doing. Have a look and choose the best category for you. The thing is, it's not an exact science, unfortunately. I know everyone would like it to be where everything has a particular place, but it really does depend on your charity and your particular circumstances. The most important thing is to be consistent from year to year. And if you put it into a more general category, like other expenses or other expenses related to service delivery, you can always break that down in the notes so people know what you've put in there.
Absolutely. Next question, volunteer expenses. If morning tea supplies are provided from volunteer and staff, then where do they get classified? Or if they're not very significant, then does it matter?
I would consider that a more general expenditure. So I would expect for volunteer expenses, it would be items that are more directly related to your volunteers. If you potentially give them T-shirts to wear that indicate they're a volunteer or that kind of thing. Morning tea seems to be more of a general expense.
Would corporate sponsorships be classed as fundraising activity or commercial revenue? For example, a corporate sponsoring a project which is delivering towards the charity's aims.
Well, again, it depends on the amount, on the expectations, on your charity specifically, what you do with that money. Have a look at the categories and consider, is this something you regularly get? Is that something you would always categorize in one particular way? Choose a category and then be consistent with it.
Next question, was there some guidance that contractors' payments are to be included in employee remuneration? If yes, then does that include payments to the cleaning company that we contract? What about the electrician that we use a couple of times a year?
I would expect those are not employees. Employees are ones that you would pay payroll tax for. If you are paying someone on a contract basis and not paying for their employment tax, then it would fit into the best category for the work that they are doing.
Fair enough. The next question, just clarifying, from when do we need to prepare the new accounts? So what are the dates?
Yeah,
for the
no worries.
template?
So the new standard or the updated standard, the Tier 3 not-for-profit standard, is required from the 1st of April 2024. So any financial years that start after that date, which is pretty much almost everybody at this point, as anyone who's ending this year, ending this month, at the end of this month, will have started their year the 1st of April 2024. So this is the first year it's required. If you'd like to opt into it for anyone who hasn't filed yet for years that have ended before this month, you are welcome to do so.
There used to be a worksheet for preparing the cash flow. Do you still provide this? Updated, as I find cash flow reporting particularly confusing and difficult.
I understand that. I believe that worksheet was provided by the XRB, and I'm not certain if they have included it this time. I'll have to look at the template, but you can also go to the template and have a look. And if not, certainly request it from them. I would expect that would be a complicated part. Just in general, actually, I would like to ask everyone if you could either send us an email or put it into the chat. I am really curious how charities who use accounting software move from their financial statements to the general categories on the Tier 3 template. Is it a manual process? Do you use Excel? Is there some software that you have found that does it for you? I'm really interested to know, just gathering information.
Fair enough. And regarding that cash flow worksheet that you're referring to, that is editable. The first tab of the spreadsheet has information on the password and how to make it editable if you want to continue using it.
So it's still in the spreadsheet?
Not the template, but it's a separate.
Oh, do we have a
cash
separate
flow
one?
Worksheet.
Okay, great.
Yeah. You don't revalue assets. Do you need to include the column?
You don't need to. The column's there. You can just put 0 or ignore it.
Can sections that are not applicable be deleted, or do we need to say not applicable?
Either one. They can be deleted, or you can say not applicable. Whatever's easier for you. Sometimes Excel can be tricky, so I don't like to advise I delete things in case it throws something else off.
That's fair.
But if you're happy to do that, carry on.
When the costs associated with commercial activities are mingled with charity's purpose, how should we handle this? My example is a church building that rents out spaces on a room hire basis to the community.
So if it does relate to your purpose, then I would put that with one of the other categories of revenue. It could go up with donations. Again, it depends on how much you receive, what it's related to, if it's related to other funding, and to follow that. And again, just be consistent. So choose one that makes sense to you. Be consistent over the years. And if you'd like to provide more information, you can use the notes to do that.
Absolutely. Next question. If you don't have reserves, can the columns be hidden when using the template?
Yes, I think they can.
Perfect. When should this return be filed annually?
I'll let you take that one, Lex.
Absolutely. Your annual return is always due within 6 months of your balance date. So, for example, if your financial year is ending on the 31st of March, 2025, or any year, then your due date is always going to be 30 September. That means filing your completed annual return and performance report sometime between the 1st of April and the 30th of September that year. The next question. Would operational cost reserves meet the criteria for discretionary reserve? For example, you want to keep 12 months of operating expenses set aside.
Yes, I think they would qualify. Discretionary reserves are an internal decision. If you want to move money aside to say, I want to use it for this, you just have to explain it. Explain in the notes what you've done and why you've done it and what your purposes are, and that you'll be using them in 12 months.
And the next question, page number can only be added manually on the template, or would you have any recommendation on how to add the page number in a more efficient way?
I'm sorry, I don't really know what that means.
I think that's a formatting issue for the template.
Okay.
The template was created by the External Reporting Board, so they might be better positioned to answer that.
Yeah.
What value does a grant or donation have to be considered significant?
Yes, that again is a value judgment. So it depends on your charity. It depends how large your charity is, how large that grant or donation is, in light of your charity and how it operates.
Next question. Are there examples provided for the new revenue and expense categories?
Yes, I provided them earlier. I don't know what you mean.
So there are some examples that we've used in a previous webinar that will be published in the very near future. I don't think this webinar had any examples specifically.
Yeah, we had some examples of how to choose which grant category. Expenses, no, I didn't really go over that in detail. I'm not sure if we provided a lot of examples. There are examples provided in the standard. If you want to have a look at that, we'll send that link to you when we send the link to the webinar.
Perfect. What asset amount are you expecting in the security note? Is it the revalued amount if it's land and buildings?
The security note. Let me have a look at the security. Assets used as security for liabilities. I think that is the note. What asset amount are you expecting in the security note? Is it the revalued amount if it is land and buildings? I'm not sure, actually. It might be the cost amount if you are using it as collateral for a liability. It would be the amount that you provided to potentially the bank if you received a loan for that asset. Whatever value you used for that would be the value you disclose here.
Would you expect an increase in auditing costs with this change? It appears that with breaking down the costs more, there wouldn't be.
I'm not sure. That is a question for your auditor.
Fair enough. The next question, should we be including income in advance, like CAM fees paid before balance date for an event after balance date, in the deferred revenue note? Seems like it is only wanting grants, donations, or requests noted here.
Right. Yeah, deferred revenue has been changed. I don't think it's really the deferred revenue that you would normally expect for accounting purposes. For things like that, if you've received fees for an event after the balance date, unless there's some sort of, if it's not significant, again, it depends on your charity. If it's not significant, then I would recognize the revenue immediately.
When an expense applies to both staff and volunteers, how is it recorded? For example, in-house team training.
Yeah, that's tricky. Just have a consideration of maybe the split of employees versus volunteers. It's again, not an exact science. Whatever category best suits for you. If you have more employees than volunteers, potentially putting it in the employee column, or more volunteers and employees, put it there, just as long as you're consistent from year to year.
Do bequests have to be recorded as deferred funds? How do we do this when it's not always clear what the amounts will be?
It depends if it's significant. Again, that's fairly specific. So you would need to review the standard and understand within your own situation how to handle that. Oh, yeah. Do you want me to scroll to that slide,
No,
Lex?
that's okay. Can you please show again where you get this updated template on your website?
Okay.
When we send out a link to the recording of this webinar, we will include links directly to the templates and the updated standard.
But I'm sure you can lead them through just verbally, right, Lex?
I absolutely can. On our website, charities.govt.nz, there are some drop-down menus. One of them is called Reporting Standards. Click on that. Click on the one that says Tier 3 that drops down. On that page, there's a table about when to use each standard. And then directly below that, you can download a copy of the template. Uh,
Oh, and also they've been posted in the comments.
Perfect. Do you know when Xero will update their reports?
I'm sorry, I don't. If you have a contact at Xero, potentially reach out to them and ask. Oh,
The next question, Xero have already updated the Tier 3 template,
great.
as someone posted. When does the GST description on the template refer to debtors and creditors and not the other balance sheet items such as fixed assets?
Why does the GST
Why?
description
Help me.
on the template refer to debtors and creditors and not the other balance sheet items, such as fixed assets? Oh, right. That is the standard language used in the GST disclosure. If that's not true for your particular situation, you can change that.
What would you class as deferred revenue?
Well, I went over that in the presentation. So when we send that back out, you can have a look there.
Is there some information available regarding changes specifically relating to the statement of service performance?
Yes, we will have our own guidance published on the website soon, and also the standard has covered that section.
What do we need to disclose in the statement of accounting policy if you've previously opted to Tier 2 for financial asset revaluation?
So you'll need to explain that you used to opt up to Tier 2 and that you have changed your policy to cease doing that and in the current year move to the Tier 3 not-for-profit standard. There might be some more specific language. The standard will provide some guidance around that.
If you're a grant-making charity providing grants to other charities, do you still record unpaid grants or grants payable to deferred revenue?
It depends on your situation. It depends if they're significant. Have a look again at the standard, have a look at what you've done previously and how you can be most consistent from year to year.
The last 2 years' annual return of my clients done by a different accountant are incorrect and have not complied with the standard. Do I need to reinstate those 2 years and start applying Tier 3?
Oh, well, that's concerning. It would be preferable if they filed in accordance with the standard. And you have the choice of which standard to use, depending on the timing of those years. If you have a specific situation that you would like to ask us more information about, just email us and we can help you through that.
Absolutely. It looks like we've run out of questions. So we understand there was a lot of information in the webinar today. Remember, you can revisit it again when you're preparing your performance report, as it will be uploaded to our website. We hope that attending today was useful to you, and now you understand more about how to use the template to prepare the performance report. Thank you for attending today, and all the best with your reporting.